By now, you've probably noticed that the Australian stock market has reacted to the new global tariffs by dropping around 2%. So while Australia isn't directly affected by these tariffs, we are very much indirectly impacted because global trade wars are never good for a global economy. So what's likely to happen next? And more importantly, what should investors do? So how is the market reacting? So the initial 2% drop is mainly due to investor concerns over potential disruptions in global trade and slower economic growth. Markets, we know, don't like uncertainty. And right now, investors are just adjusting their expectations of what might happen. But who's most affected? Australia's mining giants, BHP, Rio Tinto, Fortescue Metals, they all might take a hit, especially if demand for Chinese iron ore slows down, because lower demand is going to mean a lower revenue for the companies and therefore the stock price is going to fall. So the Australian dollar has also fallen, and this is going to have two major effects. The first is companies that rely on imports. They're obviously going to be facing higher costs, so it's going to cost them more to run businesses. That's going to lead to them having lower profits, but they won't. They'll put that back onto the consumer with higher prices. Now, exporters, on the other hand, might actually benefit since our products are probably going to become cheaper and more competitive overseas. So apart from mining, other companies that rely heavily on global trade include, there's Woodside Energy, WDS. They export natural gas, particularly to China. There's GrainCorp Limited. They export grains to certain global cereal markets. There's Sunrice. They export rice worldwide. There's Newcrest Mining. They deal in gold and copper mainly, and they have operations in Australia and Canada. But gold is quite often a very safe haven during global uncertainty. So take that into consideration. So there's also BlueScope Steel. They export steel across Australia, New Zealand, North America. Incitec Pivot. They export chemicals such as fertilizers and explosives globally. And Treasury Wines. They export wine to the US, Europe, and Asia. So what happens now will depend on what the government does. If Australia introduces more tax incentives or more trade agreements, that's going to keep us competitive in the global market. But what should investors do right now? So first, obviously, don't panic sell, never panic sell. Short-term volatility is always normal. You always should be focusing on your long-term resilience. Here's what I would do. So obviously diversify your portfolio. ETFs that track the ASX 200 are still a great idea. But if you're concerned with mining, you might want to look at those that aren't as heavily reliant on any sort of the commodities. You might even want to consider ETFs with international exposure. Something like VGS might be a good option because that might work in your favor if the Australian dollar even goes weaker, having international companies. But mostly you could shift your portfolio to having companies that are less reliant on global trade. These include companies like Wesfarmers, CSL, Coles, Woolworths. Even sectors in the healthcare are good options. Technology is also a pretty good option. And I've already mentioned the big domestic consumer staples like Wesfarmers, Woolworths, Coles. They're much more stable and have less exposure to any sort of trade implications. But you could always stick to dividend-paying companies because dividends are going to be paid no matter what the price is doing. And in Australia, the highest paying dividend stocks are generally the banks in the financial sector, utilities, real estate, and they're not going to be as impacted as much. Their prime businesses stays in Australia, and they're still going to be paying those dividends. Right now, it is generally just a wait and see type moment. If you want to adjust your portfolio, I would suggest shifting towards consumer products, real estate, banks, and maybe lowering your exposure to the big mining companies, but only if it aligns with your long-term strategy. Don't make any drastic changes. Overall, there is no need to panic. Just stay informed, be diversified, and happy investing. Take care, and I'll see you in the next video. Bye.